Hi, folks. Ryan Honeyman here from Lift Economy. Many folks have come to us over the last 10 years and asked, how do I get more involved in creating an economy that works for the benefit of all life? They also ask, what skills and experiences do I need to help make this transition? So 3 years ago, we created something called the Next Economy MBA to help address this and similar questions. Lift Economy's Next Economy MBA is an online course that's designed for entrepreneurs, aspiring entrepreneurs, students, recent graduates, employees, and folks who want to learn more about transformational next economy strategies and businesses. Join the growing alumni network of nearly 250 alumni who've gone through this program and learned essential skills and hopefully built lifelong relationships for catalyzing businesses in the emergent and regenerative economy. So we encourage you to check out our course. You can go to lifteconomy.com/MBA. The next course, Cohort 7, starts on September 21st, 2021. So once again, go to www.lifteconomy.com/MBA. And now, on with the show. Welcome to Next Economy Now. The goal of this podcast series is to highlight the leaders who are taking a regenerative, bioregional, equitable, democratic, racially just, and whole systems approach to creating the new economy.
Welcome to Next Economy Now. Brendan Martin, great to have you with us.
Thank you so much. It's great to be here. Thanks a lot, Sean.
Brendan, I'd love to start with your personal journey. I'd love to hear how you got into this work that you're doing with the working world, and where you're at now with it.
Well, it's whenever you're doing your personal journey, you can never go back far enough. Should I start with what made my parents who they were? What was the economy like that shaped their choices and their raising of me?
Sure.
The work I do is, it's a lot of the work in social justice and the new economy, and around the way the economy shapes us, and that we might be able to shape the economy. So yeah, there's no real end to that. I was really, though, personally driven to it. The problems of our economy, the problems of a class-based economy became clear to me when my parents got divorced and they really entered different classes. And sometimes it's easy to just accept whatever the fiction of your reality is, because you're just in one place and you try to, pretend the other thing. You not even try to pretend. It's natural to not just put yourself in the shoes of others. But having my mother enter poverty, when I was a child, really helped to take the veils off, and that was what started the process. Do you want me to go through a little more of that history there?
No, I think that's fair enough. And so you got that sense of inequality, that you have that real, personal experience of class distinction, and then what?
Yeah.
Where did that send you?
Well, it made me want to study economics, actually. I started thinking about why poverty, and it didn't just affect me as poverty from the standpoint of just lack of resources, but more lack of life options. So it wasn't just lack of consumer goods. Oh, my mom's got a black and white TV. My dad's got a big color one. But, my mom is stressed about money. My mom is, the anxiety. My mom has work that might feel mind numbing. Mm-hmm. I became very aware of that. And so when I got jobs, I started thinking about what is it like to have a job? What is this thing that we spend most of our waking hours doing? Mm-hmm. I guess in a Marxist sense, that would be like alienation or something, that the impact that the kind of work we do has on us psychologically was also one of the things I became really aware of.
And how did you get to South America?
So then I studied economics. First, I got a chance to do it in high school and then in university. And that was a good start. And from there, it's really fast forward many years after university, where I wrote but an important thing happened at university. I decided to write my undergraduate thesis on new promises in the economy, and that included worker-owned cooperatives. And I studied the experience of Mondragon in Spain. And then fast forward many years, there's a lot in between of learning and studying. There was a movie called The Tape that came out about the recovered factory movement in Argentina. It was the recovered factory movement. There was a financial crisis in Argentina. The banks literally closed their doors. Anyone with money fled the country. Things that made the economy go all vanished. There's sort of the liquid in the system just was taken away. But there was some point when workers realized, well, it doesn't require things like dollar bills for us to go in and produce things. Why are we waiting for a loan from the IMF just to put zeros into a bank account somewhere to actually make the real economy go? It was a really simple but profound realization and statement. And they just refused to just allow bankruptcy to be the end of the story for their economy. And workers from all different politics, from all different ages, although most of them middle-aged or older, went and took over their factories. And I heard about this story, and it resonated with what I'd studied in my thesis about worker-owned companies, because they all did them democratically. It also resonated with the part of my thesis that I talked about how the lack of some form of capital, some way for human-based credit systems and to help grease the wheels of these new companies would be really necessary and useful, because it had been in so many cooperative economies. So I went down there with people who helped make that documentary and started the working world with a number of Argentinians.
What year was that?
That was in 2004.
I remember when the take came out. That was powerful.
Oh yeah? Did you see it at the time?
Yeah, the gentleman from the factory came and showed it in the Bay Area. I remember meeting him and seeing, he was touring and showing the film. And
which theater which town in the Bay did you see it at?
Oh, I'm not sure. I was in San Francisco for a long time, so probably right there.
Okay, I might have been there at the time.
Yeah, cool.
Yeah, it might have been Lalo Perret who came through the Bay showing the movie, and I was with him. So who knows? Maybe we met in a past life.
Yeah, very cool. Yeah, well, we were part of the network of co-ops there in the Bay back then, so that's how I got got exposed to that. Okay, yeah, I think I was there. Very cool. Nice. So that was the birth of the working world. What did you have in your mind that you would accomplish with the working world at that founding moment?
When you're dealing with something as big as the economy, it's always hard to set where your limit is. You could change everything. You could change one thing. It was really even just at the time to get the opportunity to be involved in an actual productive network that wasn't part of our dominant economy, just to be there and be part of that, see if we could do anything that would function. Even the doubts that were given to us by the mainstream economy said, that'll never work. You can't do it. Those still haunted my head. I was still, are we going to be able to do this? Can we provide functional credit that flows between different businesses that are run by their workers that helps, when one business is up, its credit helps another business that's just starting, and you make this network between them. They share capital between these. Can that actually work? Is it going to fall apart? Can people really collaborate? Can we go down to a bankrupt country with the bankrupt factories that are run by their line workers to have no assets other than the machinery that they inherited, but not raw material to put in it? Can we really try to is that really a venue in which to try these kind of alternative theories? But so there was a lot of fear, which meant even just putting one brick on top of the other for real rather than in theory was I think the first goal.
So maybe catch us up from that. How long did you work in South America, and then what was it like to move back to the States?
So I lived there for 7 years, working with folks in Buenos Aires. We also worked somewhere outside of that. The office is still there. Some of the people that founded it with me in the very beginning are still there. Lots of new people have joined. They're doing all sorts of new things. They work with the government of Argentina now. They've been used as a big one of the major consultants on cooperatives and financing of cooperatives, which is fantastic. It's grown a lot. It doesn't have the access to capital it would really need, but it's pretty amazing what they've been able to do, even with small amounts of capital. So, I had gone down there always with the intention of trying to see what could be learned. I was there not because I could help Argentina, but because Argentina could help the world. Mm-hmm. And I tried to make good on that promise by learning as much as I could and bringing that back to the US, where I knew the need for worker-owned businesses, for businesses that would support a community, and for financing that was driven by the ends of community rather than of maximization of profit. These were all things that the US kind of needed as well. So then I decided to come home, rejoin my family and friends, and try to bring some of the cooperative economy from Argentina back.
And so what year was that?
That was 2011, a couple months before Occupy Wall Street started. Not saying it was causal. Not saying it wasn't. It was an opportune moment.
Well, ready for solutions, right?
Right.
Okay, and so 2011 till 2017, what have you been able to accomplish in the U.S. with the working world?
I can talk about what we've accomplished. So, it's also just what's been accomplished generally. That was a watershed moment in 2011. and really 2008, and so then the financial crisis, which Occupy Wall Street was arguably, that was a result of that. And so many other things were as well. One of the reasons there was such a lag between when I graduated college and when I went to Argentina without getting to work on cooperatives is because people weren't that interested in economic alternatives at the time. Mm-hmm. There was like the left just kind of split rather than joined between things like justice movements and the environmental movement. I literally remember people I knew saying, when I talk about class problems or the need to change the economy, they'd say, I don't care. I hate people. I'm just worried about trees anyway. It was kind of an easy out. And that's not the case anymore. Right. And that realization of the common causes in the economy of our problems has been a great accomplishment in and of itself. And so at this point, people are interested in cooperatives all over. New York City just actually gave another budget to cooperative developers in New York to continue to try to build a cooperative economy here, which is, it's a small amount in the overall New York budget, but it's a massive, massive change from where we were before.
This is the 2017 budget?
Yeah, they've done this in the last few years. They've been giving support to try to build cooperatives, and they're growing it. They believe in this as a future thing. And just recently, Senator Gillibrand and Sanders, they put forward a bill to try to figure out ways to support worker-owned cooperatives federally. Wow. So this is a new world. We, as the working world, we've grown along with that. The working world, really, what we do is, we bring together. It's worker-owned businesses, and it's also people-directed finance. So it's the twin pillars of financing and worker or community-controlled production. They really go together. It's the reason that I went to Argentina was because I'd been taught by people who maybe knew or had experienced this worker-owned economies before, that having capital that was there for the benefit of that its aim was maximization of the community benefit and of community production and stuff rather than extraction from the community was absolutely crucial to having not just a successful co-op, but a blossoming cooperative economy. So we work a lot on the financial side. And again, to say things like, hey, maybe the decisions around this capital shouldn't be just what will maximize the return to the investor. And then you hope maybe that comes with good benefits to the community, like they'll invest in factories rather than invest in closing factories or in avoiding pollution regulations. And that was a radical thing to say. I mean, our system is based on the sovereignty of the investor, of the capital owner. And yet it's had incredible resonance to the point where, people asked to speak at the Department of Labor. The City Council of New York wants to talk about it. The biggest foundations in the country are interested in this sort of thing. So we've been able to grow into both the cooperative and this, I'll just call alternative financial space at the same time. In New York, since I got back, the interest and need for this has just been, the hunger for it's been huge. So Workworld's grown a bunch. There's a number of people we have working for us. Our fund has gone from 0 to 6 million. Really, we just had a prototype fund from 2011, like I mentioned, until 2014. And most of that growth has been from 2014 till now. I could name a number of projects that we've done ourselves. And we have some new initiatives that are even more interesting than anything we've ever done as a working world on the way.
So are you a company? Are you a nonprofit? Are you a bank? What's your actually entity?
It's like I don't like to be confined just by our entity, but we are technically, we are a nonprofit right now, but you could be a nonprofit bank. Why not? We're not though a bank, as in legally we don't have the right to take deposits. It's a very particular set of legalities to go through, but that's the spirit more of what we're doing. It is a people's bank. We could also say we're like an investment fund, except we are one that, if you think about most of the, say, a lot of our world is built by investment, and it's invest in projects, whether it's our schools, our factories, our homes, our business, our work, and those investment projects, which is our lives, get bundled into portfolios and sold to investors. That's the sort of financial infrastructure, and it's writ simple. And all those people who do the bundling, though, they work on behalf of the investor. Their goal is to say, hey, investor, I can get you the maximum return possible, which can translate into, I can extract the most from these projects, right, our homes, our work, et cetera. What we're sort of doing is we're also in a fund like that. We also bundle things, but we work on behalf of the invested, not the investor, the invested, which is the rest of us. And we say, we're going to try to get you the best deal on capital we can get. So we still have to convince the investor, but we're going to not try to get the max return from them, but the max return for the community. So what do you call that? We operate as a nonprofit legally. We get some support because of that. We fit into IRS charitable classifications, but we work to create productive production. We work as like an investment bank in a sense, a nonprofit cooperative investment bank owned for the benefit of the invested projects.
Beautiful. So you get money in from investors who think this is a good idea, and then you lend it mainly, or do you do equity, or?
We do both. The most common though is some hybrid. We do equity-like loans often. So we almost always act like investors. And I could go into the technicalities, but it's something sort of in the middle, just to keep you guessing.
And then so money comes back in.
That's right.
And then what? It goes back out to the investors, so they get a return, or does it revolve, or?
It can do both. So at this point, we have a lot of different ways for money to come in. Right now, we do try to shop for the best term on capitals we can get the capital, and it'll be loaned out to cooperatives. It'll be loaned out to a cooperative again, and eventually might have to go back to the investor. That's why they put their money in, and we might be able to use it multiple times before it does, but it will go back. So it can revolve, and our hope is to always find new investors and not just have the fund shrink, so that as long as we do a good job, the amount of capital that's available to those cooperatives and that cooperative economy won't have to shrink. Initially that grows through friendly capital people, impact investors who really get this and are excited by it. If we get big enough, there's ways I could describe how we plan to do that. Then we can bring in money from the larger capital markets. Ultimately, it's the businesses we invest in who then can store money back into us where that capital might come from. So the real full circle is when the same cooperatives in that cooperative economy that are tapping the money are also the ones providing it. That's when we have a holistic full circle. But right now, that's still a bit away, but that's one of the end goals that we're looking for.
Have you thought about, or is there any type of investment crowdfunding solution that you're considering that would kind of democratize the ability to invest, so you wouldn't have to be an accredited investor to put into the Working World Fund?
Well, you don't necessarily have to be an accredited investor now because we're not for profit. So there are lots of ways we can get in investment because of the nature of what we're doing. The nature is essentially there is a federal recognition of the idea that our mission is not to maximize return for the investor, but to have this impact in parts of the economy that need it. So there's a way in which this idea, this crazy notion of saying the purpose of the investment is for the invested, not the investor, is actually enshrined in our federal law. So we get certain exemptions to take in money as long as we continue to fulfill our nonprofit mission. But nevertheless, the crowdsourcing, there's still ways that could make it even easier to raise money. And we have been looking into that. Not easy. There's been a lot of progress. The Jobs Act, still a lot of red tape. So there is a lot of legal work that we're doing and try not to spend the house on the process like blow this. But so there are options, and what we'd really love to do is be able to have people say access to the internet. Right now, you can look at our website and look at loans and investments we've done in the past. It'd be really interesting to be able to then also be able to put money into them, and then a local cooperative can also use it as a platform to do a local raise. There's a real hope that it can evolve to that place at some point.
Tell us about the Peer Network and how does that fit into your vision?
So our Peer Network, or our financial, the infrastructure for our financial commons, the cooperative infrastructure for financial commons. So this is really that's really the next big step for us. So right now we are a single fund that can raise money the way I talked about, try to find friendly capital, and eventually get big enough to hopefully get it from broader audience and maybe even go full circle and have the same economic activity we're investing in, be able to do the savings that helps the next activity. Right now, we're a single fund trying to do that. To really have much leverage in the financial markets so that we can actually get the best possible deal for the invested, we'd have to be a lot bigger than we are. We are also in only one place, and we're in New York and Chicago. Well, we're in two places, in New York and Chicago. There's an interest in building cooperatives and alternative economy across the country. For us to do that kind of hybrid investor, non-extractive finance, and investment like non-extractive finance, we really have to have a partnership and a relationship. It's hard to do that. So the infrastructure the working world has is very limited in what it can do in terms of capital raise, in terms of efficiency, in terms of power in the market and therefore political power, and in terms of the communities that it can really work with. So what we've been doing is deciding to take what we have and divest it and share it with the hopes of seeding a network of organizations that may already give loans themselves, might have a lot more experience than we do in plenty of ways, might be just starting from new, might come from a different part of struggles for justice than on the finance side, but might come from an organizing side, et cetera, and provide whatever seeds we've got and whatever infrastructure we've built so that others can do what we're doing in other parts of the country. That's what we meant by like the Peer Network. And the idea is what we're building is infrastructure so that we can share capital as commons across those different localized lending funds. What that means is altogether, we basically means we go to the capital markets altogether. So imagine there's 50 working worlds, but they're all autonomous organizations. Yeah. These local non-extractive cooperative lending funds across the country. We aggregate together to go to the capital markets. So we have the most strength possible when raising capital. Maybe we make $100 million raise. Right. Capital is best accessed centrally and in large quantities for power in that market. And then we distribute it locally. Then we use the rules of commons sharing, transparent and simplicity to then distribute the money between the loan funds. And then those loan funds in relationship with local cooperative economic activity can make the loans. And we share nationally, again, very in simple ways, our accountability and our rights, and do as much activity as you possibly can locally. So the vision is a distributed network of what we do. So you manage to get the scale of a financial system while still never losing the local contact and the intimate, real human-based relationships. So that's the idea. It's really it's like a producer's cooperative. A producer's cooperative is where individual farmers realize they can't access the large commodities market because they're not a big enough truck that has the right spigot. They can't afford a lot, et cetera. So they end up getting beat up dominated by people from the top down. Unless they say, let's make a producers cooperative. Why don't we all work together, buy a truck together, buy a space in the commodities market together. And then when it comes time to bring our stuff to market, that's when we use our common infrastructure. This is like a producers cooperative, but instead of people produce corn, it's people produce things that need the capital to grow. It's the projects in the ground that make activity happen. And that's what we're trying to build.
Wow. Love it. That's the big vision. So what would be like the next big win to get you there? Or, you're the one working world. You need another fund to pop up to join. Is that
well, we've already had, there's already a number of burgeoning peers in our network. And there's been about 28 organizations that have come together. That's more than 28, actually. It's in the 30s that have come together a couple times in a year, once a year, but a couple times now, to sort of share values and learning around how to do this, to get on the same, to find common ground, to build a network around. And a number of them are already making loans using the common shared infrastructure of shared capital to make local non-extractive cooperative loans. So a number of peers are actually growing. We need to keep doing the work we're doing. We need to get to the next scale of investment. It's still, there's a tipping point when you're looking to raise capital for investment where it's really hard. If you want $50,000, you better just hope you have a friend who really likes you for your investment project. And if you want 50 million and it looks kind of solid, right now, there's so much capital chasing large pipeline potential. If we had we could take 500 million in, then we'd have, our problem would just be finding the actual projects, not the capital. Right. So we're still at $5 million. We're still not even a boutique fund. We're still just like a nonprofit, like curiosity, essentially. We need to grow by 10x to even be a boutique thing. But then we actually are a boutique thing in a capital market, and that's when we can start to build some power for our constituents.
Wow,
that's the next big win.
Very cool. Let's talk about the investee side. What have you seen in terms of the companies you invested that you have invested in, and what's been the return? Have the investments been paying back? Have they been working out? And maybe if you have any notable examples to share.
Sure. I'll give you a couple of brief points about just to understand how the relationship works. Like I mentioned, I just sort of threw up this term non-extractive finance. So when we put out investment, even though it says a loan, it's non-extractive, which means if it gets paid back, it only comes from an increased bottom line for that business, either decreased cost, increased revenue. So they had to have grown. We can't say, okay, so we don't say, well, what do you have to secure the loan? What is your current cash flow? So even if whatever, fine, take our money, build out your executive offices and give us a piece of that cash flow. We're not just going to securitize what we do. We're looking to invest in the vision they have. So if they start paying back, it's because that vision yielded something. So the first thing to note is when the money is coming back, it means they're doing well. So when we see a return, it means there's also that there's solvency in that level. And then if an investor gets money back from us, it's because they always know it also, because there actually was good results out there in the world. Some of the borrowers have been, there's Red Emma's in Baltimore. It's a cafe and bookstore. It's got a long history, well over a decade in that city of being a space, alternative space for alternative economics, a safe space for people from all over the city. It's phenomenal coffee and phenomenal food. If you're anywhere near Baltimore, you should be hanging out there because you'll become cooler the moment you walk in the door, and you'll be a lot happier when you walk out. But that's a phenomenal space. So they borrowed money for a coffee roaster they paid off, and they borrowed money They use a line of credit to buy coffee so they could have access to more varietals and such at the same time. They then borrowed money to expand into a space inside Johns Hopkins. They did a joint venture with the DeHarka Brothers Ice Cream Cooperative, which also got a loan from us to fix up their ice cream truck. That's an it's all youth and people color owned ice cream business in Baltimore that is got a strong social justice mission. It's very interesting. Their ice cream truck has books on the back of it, social justice book. They actually have a stage on the roof so you can have people dancing and stuff while you get your ice cream. They have ice cream flavors like Shaka Khan and Cornell West and such, which happens to be tasty. Those are some interesting things happening in Baltimore. There's New Era Windows is certainly a fascinating example. It came out of a very large factory that closed down in Chicago when the housing bubble burst, and a bunch of other things went on that were very difficult for the workers. I mean, a lot of money was moved out of that factory and none of it was left for the workers. And there was a very nationally known struggle to keep the factory open by the workers, or at least to get their pay they were due initially. They gathered national attention because it was the first sit-down strike in 71 years. And the same workers who won that sit-down strike then they came to us and said, hey, well, if we could do that, why can't we even start our own company? And so they decided to buy out of auction the old company and start up New Era Windows. So they borrowed about $1 million. And last year they brought in about $1.3 million in sale after only a little less than 3 years of sales. So they brought their sales up from 0 to 1.3 million pretty quickly.
Nice.
They've borrowed and paid back, it was hundreds of thousands of dollars on their line of credit. And this year their sales are higher than ever before. So New Era Windows is a pretty awesome example. They still have some ways to go. I'll talk about them a lot more when we see how their books are at the end of the year. But the number of miracles the workers have already performed at this stage, which if you went back to 2012 and asked anybody, will these workers one day own a Windows factory and actually be able to sell Windows that people buy, even the workers would have said, no, we know it's a pipe dream, but we have to try, right? Well, they do now. And they have their sales book continues to grow as they sell more and more Windows into the economy. It was an incredible moment for labor. It was incredible. It's almost all immigrant-run company, although it's about 30% African-American, 70% Mexican. The odds were so stacked against them. Again, just to be able to own the factory, then to build it, and then to be able to make a window that the market would accept, and then to be able to get return customers, and then to grow to solvency. It's been an incredible journney. Workers who were paid minimum wage their whole lives have now learned a lot about how Windows business works, how just a business itself works. And you're really starting now to see dividends where the results of all that labor and that are coming back to open up economic opportunities in their lives that they didn't have before. And the interest in sharing that back to a broader economy has really started to grow as well. So New Era Windows, if you need Windows, you're in Chicago, you should definitely demand New Era Windows. Even if you don't need Windows in Chicago, you should just get them. You'll be happier.
I love the examples. Thank you. How about across the whole portfolio? Like, is it working out, this idea of investing, non-extractively in co-ops? Or is it, financially shaky, but you're so strong on the mission, you're just pushing through?
Yeah, well, I would say it doesn't help you can't ever confuse mission for function, and you can't confuse function for mission. You find lots of people would say, I know it doesn't work, but it's so great. And other people say, it works so well, I don't care if it's not great. The first might be sort of the stereotype of a wide-eyed activist, and the second would be the stereotype of a cold-hearted businessman. You can't do any of this without both. The simple answer is we've never had a down year since we started in 2004, despite I'm pretty sure there were some out there who had a down year in 2008 and such. We didn't. People just borrowed a little bit less money. You could see in our books, just there was less borrowing for a while, and then it picked up again. The number of defaults we had didn't because, well, we just don't. And we don't, our methodology is not based on speculative overheated growth. It's based on real growth that meet real needs. And I'd like to say that the easy answer then to say like the same is happening here in the US and say, yep, we had a positive return last year, about 2%. This year, it's going to probably be over 3, close to 4, that across the portfolio. The truth is, it's just too small a portfolio still. We need to grow it. All indications point to, this can actually work. It can have low risk. You can have a diversified portfolio. Investors should move their money here because not only will they have a safe place to put their money, but they'll actually be helping to save and change the world. But we need more of them to do that. So we can say now we've done it with a $50 million portfolio. We've done it with a $500,000 portfolio. We've done it with now a $5 million portfolio. The returns, turns out, are better than on the market, depending, market returns with interest rates, what they are pretty low. So we've been able to see, 98% of our loans have paid off in full, and the profit sharing we have has always been well more than whatever losses they were across that many years. So I still want it to grow a lot further and be a lot bigger and have a lot more proof of concept. But, having had a better return track record than any of the stock markets over the last decade and before is it's hard to argue with, I guess.
That's what I wanted to hear. and like you were saying, it's real results. It's not just a great idea that we can get really excited about, but it's both. So
yeah. And we'd be clear, we've done thousands of loans and hundreds of companies, millions and millions of dollars have gone back and forth every day. We're looking at people's P&Ls and if you ever were going to ask a question like, well, what are some of the best practices? It's be on the ground, do real stuff on the ground, build actual thing, be incredibly bold and incredibly practical. And so, yeah, I mean, this isn't 2 projects. We do 2 projects a week. And so it's the aggregate of a lot of human activity. And it's put together to have real positive results, just financially. But then when you look at the human impact, it's been, we're happy. It's been pretty incredible. I'm pretty lucky.
Well, yeah, you preempted one of my questions is kind of what have you learned through all this? So I heard just be practical, actually build something on the ground. What else? Any other key learnings? Anything that really surprised you that you didn't think that you'd learn through this process?
Well, maybe I'll say I'll be a jerk and say some of the pedantic ones first, and then I'll tell you what surprised me. But I'd have to say that the be practical comes from a lot of places. On the one hand, when we're motivated very emotionally by like injustice, it's hard to then sit around as long as it takes for building real economic stuff. The cycle of building real economic activity is much longer than the cycle of emotional outrage. And that's hard. You've got to stick through it, and it's going to take time, but it's like a garden. You plant seeds, you wait, come back in a month, like, I can't believe it. It's still just a pile of dirt. And almost all the activity happens near the end. And finally some sprouts come up and they finally go, then all of a sudden they just this flourishing garden. And there's all that part of the, of the sowing, and it takes time. And if you give up in this first few months, because it still looks like it's just dirt, you're not going to ever find that moment when it starts to really flourish. And that's a lot of the lesson of this is it's really back-loaded. Our emotions are really front-end loaded. We're very excited in the beginning, and oh my God, we got to do something about it. And the results are really back-end loaded. You've got to stick in it for that 11th hour. And then that's when suddenly results start to pour in. So I see a lot of people give up too soon. That's where I say be practical, stick with it and build things. It's also, there's a real temptation therefore to stay in the world of the concept, because you can give it, like you said, ideas. It's easy to then go up and talk about an idea and get a big emotional response. People are excited. They're hungry to hear about a vision of what can be different. And that sticks with the emotion cycle. The communication cycle is fast enough to give you good feedback. And it's easy to stay on the conceptual level. Don't do it. Make real results. Look for real results in the concepts you hear about. Push each other to do those, to not just talk about it. And in the nonprofit world, the urge is really strong. It's really hard to both continue to make sure that the people who might fund you know what you're doing and feel good about it. There's a lot of really good people out there who are program officers, even if they're working for something that's the product of a screwy system. Philanthropy is part of this odd part of capitalism. There's an incredible number of good people who are working in it to try to bring those funds to good things. But it's an incredible amount of work to still bring the information to them. And it's tempting to do less work on the ground because of it and spend more of your time. So you kind of see this perverse thing in the philanthropic world where organizations that do less work on the ground sometimes get more funding because they spend more time just building concept papers that funders can understand. And while if you're going to need grants to be driven, don't let that tempt you to don't back down from the work on the ground at all. I mean, that's why we all got into this. If you end up realizing you're just there because you need to bring in the next bit of money, just go into private business. Don't bother. So I guess that's the jerky pedantic stuff I can talk about. It's really about the stuff on the ground. Working in community, building real things. Don't get lost in the concept of the fundraise or just the communication cycle. Surprising things. Surprised at how fucking well some of it can work. I was told it's not supposed to. We were in Argentina and we were working our butts off. And that was one of those times when it felt like, man, nothing's working. And then a little bit after 2 years passed, we looked back and we said, oh, holy shit. Wait, a bunch of those projects that just seemed like an endless struggle, they came to fruition. All of a sudden we looked and our track record was 98% success. And that was shocking. There is a real, alternatives are really possible as long as you're willing to do the work and stick with them. There's a reason that, the places that we worked in Argentina would have had a negative score on some international underwriting system because we were working, they'd say, well, what's the country climate look like? Oh, the country just went bankrupt and had the largest sovereign debt default in world history. Or the companies look like, oh, the company's just went bankrupt. Oh, all top management left and they have no working capital and very little assets and they're being run by the line workers. Okay. So you have a bankrupt country, bankrupt companies, no assets. This is a negative score on international underwriting standards. And yet 98% of them paid off, which is better than commercial results of banking in the United States. So what the heck happened? It's part of the success model is because it is alternative, because we had real partnerships with the businesses who worked with in Argentina. We'd be their first call when there was a problem rather than wanting to hide the problems from us because they knew we were real partners. They knew when the money went back, it went to the next worker cooperative in Argentina. It wasn't going just to make someone better off. Some fat cat already had a ton of money, just a little bit more. The alternative model also made alternative relationships, which is what's made it really work. You're not fighting against something, you're fighting with human potential and ingenuity. So I've been really surprised at that. This shit can work. You stick with it. It doesn't mean, again, it's not easy, but I'd say anybody can do this. Nobody can do this without a lot of work.
Yeah, I love it. Well, Brendan, I really appreciate you sharing the great work you're doing, the working world. And I love the prize is the success, but it does take hard work. What do you need? How could our listeners help you out?
I think even that alone, just believing, there's this idea that Tina, there is no alternative. People have felt that for a long time. Letting that go, believing that the state that we live in turns out it's not actually, well, it must be this way because this is what we were born into. Right. People would have said that at any point in history, and it turns out history does change. So it's good to be part of that change. For sure, we take investments and your money in now when we're still early and young is the really pivotal instrumental money. So if you want to make change, it's a way to really make change, to be part of it and to invest in it, or help start cooperative economies in your own town and stick with it. Make sure you got a couple of years, and you'll be proud of what you built. At the end of it, it's like child rearing. There's not individual days are not necessarily easy, but what you have at the end of having raised children will be the thing that you care about most in your life. It's kind of the same stuff. You'll have a life that building things like a cooperative in your community is the kind of thing that you build meaning in your life. So yeah, that's just a wider effort, it's a big tent, all hands on deck kind of thing. So more hands on deck, making it happen is, I guess, the only thing we could ask for. Beautiful.
So if people do want to invest, get in touch with you or the Working World, what's the website?
Yeah, tww.org, tww.org. You can go there. There's a place basically right now, just still from caution around disclosure rules, you just have to reach out and contact us, and we can talk a little bit about what you're looking to do. We're mostly looking for people in the multiple thousands. We really have a minimum that's closer to 25,000 for individual investors. That's where we could democratize it more. Well, at some point we're going to be able to take in lots of $100. It's really more a capacity thing. If you have that many small donations, it's a lot or small investments. It's and we don't want to overwhelm with the admin, but donations of $100 certainly work. And so yeah, please come to tww.org, check it out, look at the investment projects, and investments and donations are very welcome.
All right, Brendan. Well, thanks for all your great work, and thanks for being with us here on Next Economy Now.
Thanks a lot, Sean.
Next Economy Now is a production of Lift Economy. To listen to all of our episodes, go to lifteconomy.com/podcast. That's LIFT economy.com/podcast. You can also sign up for our monthly newsletter at lifteconomy.com/newsletter. Please also rate and review our podcast on iTunes, Spotify, Stitcher, or wherever you get your podcasts. Thanks for listening.